Welcome, everybody. It's Thursday, the latest edition of Forex Focus. Very exciting. And I'll use the word, I hate it, but I'll use the word, Liberation Day. What a day for FX. Unbelievable. Let's take a look at markets, where they're going, what they're doing. It is, again, broad array of tariffs were thrown out on different things at different times. It was kind of a wild ride in U.S. equities. They rallied before they absolutely collapsed. SPOs are down almost 4%. They came back a little bit. Russell's down close to 4.5%. NASDAQ, same general area. They flirted with almost limit down in U.S. equities. Bonds screamed higher. And it was interesting because the first reflexive move was for the dollar to get bid. We saw Aussie trade down from 63 cents down to almost 62 cents, 62.70, and we're putting in new highs as we speak. The euro up almost 2% right now. Remember, guys, that's a huge move on a product that has roughly 7.5-8% volatility. You're talking about a huge move. So euro up 2%, pound up 1.2%, dollar yen down 2%. And that was the one that was unrelenting. From the moment this was announced, people were selling dollar yen. They were buying yen, that risk off piece, I think, with equities. And this was even before the equities rolled over. It was just the idea of taking some of that. Remember where we were in dollar yen, 150 was still a relatively rich level. So we're down to 146.33 right now. Dollar Canada took a little bit more time to release, but it did. Aussie, a big up day. Kiwi, an up day, but Kiwi still fighting a good fight, but not quite outperforming like everybody else. You look at Aussie and Kiwi both not performing to the same degree that Aussie up 1%. I'm sorry, 0.5%. Kiwi up a little, 0.6%. So not the same degree in commodity currencies. But what we saw was silver get absolutely smashed, copper get smashed. The commodity currencies, again, thrive in a stable, robust economic environment. I think it's hard for anybody, whatever side of the fence you sit on, that we have a strong, stable economic environment right now. How this all shakes out, I don't know. But again, the tariffs were large. They were different people got hit at different levels. The Chinese singled out, Cambodia singled out, huge levels. Now the Europeans are working, and they're going to have their response to this, I think, by the middle of next week. So everybody is going to start stacking sandbags, so to speak. But it's interesting. So you would think tariffs come out. What have we seen the last 90 days? Dollar gets bid. Euro slams down. Kiwi and Aussie get hit really hard. They did, but it lasted really less than a couple of minutes. And the buyers emerged and took the markets to new highs. We are now above 130 in sterling. And let's take a look at sterling because it is quite a ride. And we'll go back to euro because it is the outperformer. We got up to 132 overnight. So and let's get a little bit more time frame on here because it's better to look at that. So I don't know what these lines are doing here. Let's get rid of the lines. But we are seeing an appreciable big move up through. I mean, what was the tradable range? It really was, high 128s, 129s. 130 was the inflection point. We tested a couple times, we failed. Now, the fact that we're through it in a single day, can you say that? Well, there's not a lot of action around that level in terms of chart points or price action. It's only been a day. I think this is the case where we powered through 130 really quickly, and we're holding on to the upper end of this range. Anybody who's short here has to be in a more uncomfortable position. I'm just stating the obvious there. But I think if we see this market go out towards the upper quartile of this rally from 129.50 to 131.70, probably see some more extension in this one. This is a clear, I mean, if we were sitting down here, we got through it as 130.40, 130.30, and just chopping around. Yes, we're through the big 130 level. Not a lot of energy. A lot of energy here, very little pullback. So we had a pullback. Euro, well, let's go take a look at Euro because it's certainly with a 2% move. It's just, hold on a second. There we go. Let's go over to the daily. Fantastic. Let's tighten up a little bit. So, we spent a lot of time post-election, 106, 102. We tried that 109 level a couple of times. Now, this is that same type of tape action of clearly going through recent highs. I think this is the same thing. We're through levels that we haven't seen in a while. The buying is sticky. It's holding in. We traded all the way up to 119.92. Or we traded all the way up to, 111.83. What am I saying? 111.83. And we pulled back about 30 pips. Now, buying has since reemerged. So, again, that was a rally of almost, 200 plus points from the lows yesterday. A 30-point pullback is a pretty thin pullback. So if you're going to be at the contrarian on days like today, you have to be thinking about what's realistic. If you're the guy who's going to say, this is way overdone of a reaction to these tariffs, you're going to start layering in some shorts, but I certainly won't commit my full trading size at this point because I think you'll get better levels to sell them. If you are going to trade both sides of this, you're going to have to be mindful of what you can expect on a contra-trending scalp right now, because what the market's telling you, at least right now, there's, we had a 40 or 50 pip pullback. That's about all you're going to get. If you're looking for it to drop back to 108 for 110.75, I think that's going to be a tougher trade to see. Even though that's where we were just yesterday. So I think we're seeing this across the board. Let's take a look. We looked at sterling. Let's go ahead and look at Aussie. Same thing here. Let's get to the dailies. Completely different chart construct, though. Good update. We're up. What are we up? Almost 1% off the lows, about 56 ticks. Certainly nothing like euro and sterling. The Chinese story probably weighing on this a little bit. Aussie's largest trading partner has a very steep tariff regime put out against it. And the Australian market, while the Australian dollar's up, nowhere near the amount of movement. If we were to look at apples to apples and say an equivalent move, we'd be looking at 68 or 69 cent Aussie if it moved like euro had, back to the upper end of that range. We're nowhere near that. Same thing with Kiwi, even to a more muted factor. Sure, staging a range from this compressed area, we're still not through the old high, let alone getting us back into that 60 cent, 61 cent level. So you can look at this a couple of ways. It's the weakest leg of the stool, so to speak. If you're looking at dollar pairs, it just doesn't rally to the same degree. Oftentimes, and I know sometimes it seems counterintuitive because, geez, that euro's moved so far, it should pull back. And at some point it will. We know, but that could be from 112, not where we are right now. We know when FX goes to a new range, it gets very elastic, so it will move more. But I think, as tough as it is, this is a case. It'll be interesting to see how this unfolds. We have unemployment tomorrow, which we'll get some movement off of too. But oftentimes, the conventional idea is I want to buy the cheap one, and that's Kiwi right now because it's going to catch up. Everything else is on a tear. Kiwi's not. Kiwi will catch up. Well, the tape action is telling you it's not catching up. there's no secret message that will come out that will drive Kiwi to move by the same amounts Euro, Sterling, Canada have moved. So it's one way to look at this is if you want to be long, you're trading pullbacks on the things that have put the most upside into them. You're trading things that have an upside bias. If you want to be short, I know it's hard to sell Kiwi down here, but if you want to be short, any rally here, you lay some shorts out on, and if the dollar stops falling, i.e. if Euro, Sterling, Canada don't continue their move, chances are Kiwi's going to get back some ground. So it's just a different way from looking at it relative to the pairs trade. This is cheap, this is rich. It's more of a momentum performance metric within the different currency pairs. So some interesting insight there too. And again, we got a busy week. We just had, I think we had jobless claims at 7. No, we'll have that at 7:30, and then we had challengers layoffs this morning, bigger than expected. So, and that I bet you, no, it didn't do much equities, but again, SPOs are down 193, Nasdaq's down almost 771, and it's going to be an ugly opening. So for equities, and it'll be interesting to see how that plays through right now. Gold is finally giving back its ground. It's interesting with the tariff news, the semi-precious industrial metals like silver, like platinum, sold off last night early and continue to sell off. Gold actually printed a new high, almost close to $3,200 last night before the selling came in. So it's at a $100 range right now, and it's actually putting in new lows at 3109 as 3108 as we speak. So does gold figure into my commodity trading with Aussie and Kiwi? A little bit, not too much. I think there is bigger things at play right now that I want to be mindful of. The movement in yen is the most consistent in terms of, the pullbacks we got. And let me go to a little bit shorter time frame. Let's just do an hour, because this is good to see. Once the selling occurred, did you get bounces? Yeah, you got bounces for 24 ticks. You got a bounce for about 35 pips here. On a 400 pip move, that means if you're going to counter trend and buy this as it runs lower, you need to be thinking about what's realistic to pull out from the upside. And from that discussion, then where am I getting out? Because I don't know where it's going to stop. And yes, it's a big move and it's tempting. It's too far, too fast. We've been here before, guys. We know currencies when they move, especially when they move out of their normal ranges, whether a nominal range here or their daily average range, they get very elastic. So be mindful that what seems awfully cheap or awfully rich is until the point that they trade through it. So I would be very mindful around the way you look at what's realistic. Buying this right now on the lows at 146.30 and looking for 100 pip bounce on this versus the tape action this morning, that's unlikely. If you're going to buy something here down against this previous low and look for 35 pips, that's worth doing. And that sets up nicely because you're looking for 35 pips on that trade, and you're going to probably risk the equivalent amount on the downside. So if they clear 146, you're out. You've just constructed your trade with a good edge to it in terms of you've got a price extreme. We know we're well past the 2 standard deviation level. And you've set good metrics around it. So these are all good. So there's lots of opportunity here. And unemployment will give us another kick. Whether it lasts for anything, who knows? But 131 is huge in sterling. Let's just take a look at Canada before we go out. Canada, same thing. Not the same degree to the move. Canada up 1.5%. Far better than Aussie and Kiwi. What does that tell me? Canada is a commodity currency, but it's detaching itself from the Aussie Kiwi story. It is getting a little bit of a life of its own. So this 1.5% move in Canada is closer to where sterling and euro and yen moved than where Aussie and Kiwi did. So yesterday the Senate did pass with enough Republicans to say that the ability to put tariffs on Canada is illegal. That bill still has to go through the House before it becomes law. and that's going to be difficult. But I think the idea that there is now some pushback to this is certainly helping Canada. And when we look at, let's go back and take a look at the daily, because I think this is important context. When we look at the daily, sure, we're off that post-election 148 high. We're back down to 141, but we've just basically gotten back. This was our whole election. Oh, tariffs are coming, and we don't know what they're going to be. I remember reading a report from Goldman Sachs saying, "I'll expect 165 Canada." Classic, markets are very efficient. They price well. This is a very different looking chart than your euro or your sterling chart. While it's down, 1.5% is a big down move. When we think about where it can go, I mean, there is a lot of room for this to go without it getting to that kind of extreme look of, a 111 or 130 sterling or 111 euro. So again, looking at this is one where I would, and I know it sounds almost paradoxical, I'd be willing to play a little catch up here. If we get a little bit of bounce in dollar Canada, that might be one I would be willing to sell because the tape action looks constructive and there could be some room to run here. As tempting an Aussie as Kiwi is to buy, I just can't do it. I don't see the opportunity there. So, you know what, guys? There is a ton for us to get involved in today. And most importantly, the moves are big. So put that into your outsized moves. We're going to stay at a higher vol level. Mechanics are going to be more elastic. Stay disciplined around your entry and exit levels. But you're going to get, even today, we had huge moves up and solid pullbacks down. Be mindful of where you manage because there's a lot of good two-way action to take advantage of here, but make sure you have those decisions made ahead of time and you're mindful of your size. On a high volume day, the first thing a trader does is bring his size down a little bit. So doing that, you could pick any of the majors, go through them, and find good trading opportunities. So guys, appreciate you being with me. Coming up next is Tom, Tony, and Vanetta, and hopefully Glenn and I will see you back here tomorrow. Have a great day.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say?